following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom. How's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We have the Dow Industrials down 125, NASDAQ down 42, S&P's down 15, gold contract down $6.90, traded at $1,288 an ounce. Silver off 21 cents at $17.44 an ounce. Platinum down 14 bucks at $1,065 an ounce. Copper down 5 pennies at $2.21 a pound. Light sweet crude off a buck at $43.72 a barrel. Bonds, we have the 10-year note up 18 ticks, 130.09. 30-year bond almost up 2 points, 163.26. King dollar up 307 ticks after getting down to 91.80. You're at 92.92 right now. Euro down 26 at $1.15, and the yen trading flat at 106.43. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So cash S&P, we're at 2063. We get to a low out here today of 2054. You have volume in the... We're at 665. So what we're going to do out here, we're going to have heavier volume than yesterday. That's what it looks like. If we go to the SPY, we take a look at the SPY. SPY right now, yeah, this is going to be an ABC down. Okay, so check it out. So Friday, we get down to $205.03. You do 142 million shares traded. Yesterday, you go higher with 62 million shares traded. We already did 79 million. This is building cause, folks, to blow away this B point of a small ABC down at 205.03. That's how that baby's set up. The NDX 100, the 3 Qs. What do you have inside the 3 Qs? 3 Qs, we're down 65 cents. We came down Friday with 67 million shares. You bounced yesterday with 24 million. We already have 22 million. 3 Qs doing the exact same thing. Gold contract, what do we have with gold? Gold contract out here is trading down $7. You have 206,000 contracts. You're going against 274,000. So the low of, when we broke topside on Friday, the low of that was 1267. You went from 1267 to 1299. You're coming back into that, and it hasn't got to the bottom, and I don't think it's going to, with lighter volume. That's saying, you have a confirmed ABC up inside the gold contract, but that's saying that, guess what? They can't whack gold down. Silver. We take a look at the silver contract. What do we have with silver? Silver, we got to get the right contract. Okay, so silver right now, there she is. Okay, so pull up, baby. Okay, we're on the July contract. Silver out here has done 59,000 contracts. You're down 22 cents. And silver is coming down with 59,000 versus 72,000. Silver also can't make it to the bottom of the break top side, which is $17.18. King dollar. Now let's go to King dollar, because what did King dollar do? Okay, King dollar gets down to 91.88, rejects lower price, but guess what? You get monster volume. King dollar is going to be right back down there. Now, King dollar, no doubt, could probably bounce to 93.62, but you broke lower, you broke with volume, and we'll see what kind of a bounce we get out of here. That's how this is shaking out. If we put this on a continuous contract, what you're going to see is this. This has been in a consolidation. The consolidation has been in place since January of 2015. The bottom of that consolidation is 92.36. You came down there in August again at 92.52. You broke both of those. Bottom line, you broke this one with volume. You'll be right back down there. 877-927-6648. And what you can look for coming into this closeout here today, folks, is fast and furious selling. The lows out here today, so check this out. This is a trader's paradise out here. If we go to the E-minis, what you're looking at in the E-minis is this. The low today is at 2048. We had a nice counter-trend bounce. That counter-trend bounce got up to 2060. We started off the day at 2075. And what you're going to see is that you're going to see this baby get down into this low out here of 2048 once again. Some of the Dow stocks out here, this is where we have some of the Dow stocks out here. You have Johnson & Johnson down 16 cents. You have Boeing off 137. ExxonMobil's down 111. You get Citigroup down 111. DuPont's down 127. Inside the Dow Industrials, the strength versus the weakness is this. The strength is Pfizer. That's up 2.7%. Apple's up 1.7%. United Health is up 0.4%. And McDonald's is up 0.2. Taken away from it, the financials are getting hit out here. You get JP Morgan down 2.2. Cisco is off 2.2. United Technology is off 2.2. And Chevron is down 2. Inside the NDX 100, what do we have? Strength inside the NDX 100 is Liberty. That's up 0.4. No, that's up 4% rather. Endo Pharmaceutical, which is a real dog, that's up 4%. Alexa Pharmaceutical is up 3.9. Taken away from it. On the way down, you got SBA Communications down 5.8%. Seagate Technologies down 5.4. You get Western Digital down 3.8, and Tesla is off 3.2. Our phone number is 877-927-6648. Some of the higher volume stocks out here, this is what you have. You get Freeport-McMoRan down, that's a $1.44. That's a good pullback. Let's go to FCX. So you get, okay, so you get Freeport-McMoRan. This stock has had a really nice run. You're pulling back with lighter volume. You're at 12.12. That can get back to about 11.44 to 10.49. Keep your eye on that. That's going to be a buy at that point. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's down 144. Nasdaq's up 44. S&P's are down 18. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. And after the close out here today, we're going to have lots of numbers coming out, folks. We're right in the middle of the earnings season right now. So you can expect this volatility is going to continue. If we go over to the Dow, we take a look at the Dow. What you have is this. The low in the Dow on Friday was 17,651. The close was 17,773. You're going to see a lower close out here today. And I suspect what you're also going to have out here is this, is that as it comes into this price point, you're going to see the volume expand from yesterday. Then what you're going to have is that you're going to be sitting right at ice again. So tomorrow you can very well get a small gap down. Nothing heavy. Well, actually, let's put up the S&P. I'll get a better gauge inside the S&P. So if I put up the cash S&P, inside the cash S&P, this is what you have. Yeah, this would be nice. Okay, so the cash S&P, well, here, I'll put up the future, actually, because because the future won't gap, but it'll give you an idea where you could wake up in the morning. Yeah, okay, so the low of Friday was 20.45. The close was 20.59. Now, I expect that we're going to actually be down to about 20.49 as we come into the close out here today. That's the first one. The second one goes like this. If that's where we end up, this thing can gap down another 20 points when you wake up tomorrow morning. Because we're right in that range right there, meaning the range that we traded from the 29th of March over to the 12th of April. And bottom line is that this is the end of window dressing, and this type of window dressing here is just showing how many sellers there are versus buyers. Because what does happen is this. Window dressing is a natural phenomenon for buyers. It's a long-only crowd, and that's just all the IRA money, everything else that's going into it, okay? So the bottom line is that what you have here is that it's showing how much other selling is inside this market. We go take a look at the small caps out here. This is what we have with the small caps. Small caps have a bounce yesterday, 21 million. You're down today on 28 million. You already broke the low that was established on Friday. Friday we were down to 111.72. You're at 111.75. You went to 110.93. So those small caps, you close. 111.22. No, it's not going to close under that. Well, hey, who knows? We were at 110.93. If you close under a 111.22, what that sets up is that sets up a run down to this 108 level. You know, that's how that baby sets up. We take a look at the some of the higher volume stocks out here. We have Chesapeake Energy off 70 cents. You got Cisco down 55. AK Steel is off 24. You got Intel down 31. Facebook is off 80. If we go take a look at Google, Google's flat. And if you saw this when I was listening to our man, Mr. Dave White, he was talking about Apple and Tim Cook being on CNBC. There's no doubt, you know, I didn't see that. But you talk about desperation. Let me tell you something, man. That's the classic, if you read Reminiscence of a Stock Operator, that's the classic deal about how to pump a stock. But guess what? It's too late. It's too late. It's over, okay? The Apple is doing another ABC down, folks, okay? And the A point on this is a monster. The A point is $112. Your B point is the low established last week of 92. You're bouncing today with 48 million going against 82 million and going against 114 million. And what I expect you're actually going to see here coming into the close, the high of today in Apple is 95.74, and more than likely we're going to see it's, you know, nothing heavy, but 95.10. It's going to give up. You know, I suspect just some of the slight gains that it's had so far. And when you take Apple back, we'll put this back, put this on like a 3-year deal, and what you're going to see is that, you know, it's a beautiful topped out at 133, monster volume on the way down, gets down to 92, has the juice at 92. The next stop on Apple, man, is down at 79 bucks. And then what that lays out, which is just crazy, is that is actually laying out a very large head and shoulders that you know, might bring it down to $28, which is just insane. I know, believe me, I know that's insane. But that's the way that thing is laid out, man. And, you know, if you think that a stock can't go to the moon and come back to hell, yeah, that's... if I could bring up some of the stocks like GM, you know, it did the, you know, there's plenty of stocks that have done that, folks. That's the bottom line. And Apple in particular, when you take a look at the amount of volume that's at the top, man, it's amazing that they held it up this long. Yeah. 877-927-6648. We got the Dow right now off 158, Nasdaq's off 52, S&P's around 19. When we go look at Europe, by the way, folks, what you're going to see is this. We're not down bad right now. We're only down 0.8% in the Dow, 0.7 in the S&P's, 1/10 in the 1% rather in the Nasdaq. The FTSE was off 0.9, and the FTSE was holding up much better than every index, meaning in Europe and in the United States this morning. And what did it do? It sold off into the close. The DAX was down all day. The DAX closed down 1.9%. The CAT closed down 1.5%. Spain closed down 2.9%. You start adding that up, what you're going to see is that you're going to see these, I suspect you're just going to see more selling coming into the close. You know, this is a one-world deal, and it's really sweet for a trader when Europe has already closed. Europe couldn't handle price, did the bounce, and then sold off once again. And what this is, you get that bounce going, they bring it up, push the equities out, sink it down again. Let's go to the XAU and the HUI. And the next few days, we get a lot of gold and silver equities coming out with numbers. XAU out here is down $3.43 today. We're at 87.30. Now that's coming into 69 million. And what we'll see is this. The 69 million, as it's coming down, I expect we're going to have lighter volume today. I won't get that till 8 o'clock tonight. The HUI, we take a look at the HUI. HUI is down $7.12. That's trading at 221. And that's going to have to, we'll see whether it's less than 39 million. When you look at the actual equities, most of them are trading with lighter volume. If we go to Rango Resources, take a look at Rango, you'll see the dramatic difference. It's down $4, 930 38,000 shares are going into 1.6 million. Danny wants to look at GDX to see what the volume is there. The GDX is down 56 million, going into 104 million and 116 million. Bottom line is, what do you have? You pull back. That is with lighter volume. What you do also have, too, is this. This is quite a trip, folks. If we go over to the GLD, if you want to see something that's pretty wild. So the GLD, right, is the Street Tracks Trust. And bottom line is that they have to hold physical gold. Well, Monday, they had to buy 20 tons of gold. 20 tons, that is. Why? Because that uptick on Friday was about as dramatic as you get. Just to give you an idea what 20 tons, metric tons are, that's 623,000 ounces on one buy. That's the largest since 2011. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And so if we stay with that GLD for a second, so check this out, folks, because this is always intriguing how this works out. So this is always the chicken versus the egg. So the buy that the GLD did on Monday was 623,000 ounces of gold, 20 metric ton. Okay, just to get your head wrapped around that's the largest single buy since 2011. What it also is, though, is huge buying pressure inside the gold market. Now, what happens is this. When the trend is with you, in an ETF structure, the trend is easier to keep up. Why? Because guess what? When they bought the 623,000 ounces of gold, more than likely someone had to sell it, right? Now the question is, when they sold it, are they trying to buy it back cheaper or not? Well, it hasn't got cheaper. That's the first part. Now the second part gets more intriguing, and what it is this. As if gold stays at this point, or just gets a little bit higher, the way that the GLD buys and or sells is this. One of the questions in the den is, why didn't they wait, okay, at a cheaper price? Well, they can't wait. Any ETF structure, they have a time frame that they can use a derivative position during the day, but inside their prospectus, if in fact it's going to be a physical delivery, well, they got to go from the derivative to the physical position. So what ends up happening during the day, if gold goes up dramatically or down dramatically, they can use the derivative position in order to basically smooth that out. Okay, that's what happens. Then, however, they got to convert that derivative position, which is either buying or selling options or futures or whatever. And they're just trying to stay delta neutral, by the way. They're not trying to make money or lose money. What they're trying to do is that as people buy the GLD, they have to buy the derivatives to stay even, so their net asset value stays even. If it goes down, they have to do the same thing. Bottom line, though, when you have an aspect that the buying continues like that, you can see how that shakes out. Because that buy there was about as dramatic as you can get. And, you know, we'll see where the rest of this does shake out. But that was the largest one-day buy since 2011. And it totally makes sense, because just to give you an idea of what that is, 623,000 ounces is 4 times larger than, let's see, it was 3 times larger than anything that gets done in the commodity markets, period, by the week. Okay, so it overtakes everything, you know, and that's what's kind of intriguing about the ETF structure itself. And that's just not the gold ETF, by the way, too. What that is, now I'm going to flip a switch on you and go over to the QQQ or the SPY. So what ends up happening with the QQQ and inside the SPY is the same type of aspect when we're going down. So as we're going down right now, let's say we're down $1.03. So as we're down $1.03, what ends up happening is the highest weighting structures that are inside the queue get sold. Now, as those high weighting structures, meaning Amazon, Apple, Microsoft, Google, Starbucks get sold, what do you think happens? They get sold, that puts the queues lower, the queues got to get sold again. So these ETF structures, you want to understand how they work, because you can not necessarily get ahead of them, but as the markets move, you can understand how and why markets move better. Because what ends up happening is that when this first started, folks, I'll never forget this, in 1998, 1999, when we were going up and then we were going down, people couldn't understand why it could go down so quick. You know, when we were trading just the OEX options in 94, 5, 6, what we used to do specifically, we knew inside those NQ options, okay, inside the OEX, is that all you had to do is push 4 or 5 stocks higher coming into that 415 close, and guess what? That option would go. You know, so, and believe me, those market makers know that, and big operators know that. Dow right now is off 163. You get the Nasdaq down 54. S&Ps are down 20. We come over and we take a look at these E-minis. Okay, so what you have thus far is this. Okay, the low out here today is 2048. The high of that low is 2051. We're at 2054 right now, and you have monster volume too, by the way. So this bar right here, we're already at 27,000 contracts on the way down. They're going to jam this all the way down. This is big volume, folks. So yeah, this is the high of that is 2051. We're going to be at 2051 in about a heartbeat. They're pushing into this in a big way. Now, just if you want to see what that correlation is, when we did that counter trend bounce, we had 28,000 up at that high. This is only in a 5-minute bar, and we're 6 minutes into that bar right now, and we've done 30,000 contracts. So this baby is coming into its low. The low of today had 57,000. You're coming into that low with the same amount of volume. So I suspect what you're going to do, number one, you're going to get down there first, meaning the 2051. If it builds cause at 2051, guess what? See ya. Don't want to be ya. That'll just blow that baby right away. That's in the S&Ps. If we go over to the NQs, we take a look at the NQs. What you have with the NQs is this. The NQs right now are down 39 bucks. They also have an expansion of volume. Huge expansion of volume, by the way. 62,000. So, 6,200 rather. Yeah, 6,400. So the NQs, they want to get to this bottom. Now, the NQs already have more volume than we do at the bottom. And the NQs, just to give you an idea, when it did the counter trend bounce, we were 4360. You did 4,400 contracts on a 10-minute bar. Right now, we're 7 minutes into that bar, and we've already done 6,600. That's going to set up a run after the low, and we'll see what ends up happening down there. One of the tigers want to look at the trend, and the trend right now is running at a 1.99. So it's a pretty good trend. A 5-day trend is still not high enough, though. Right now, we had a 1.34 yesterday, which is just over the 1.1 the day before, 1.1 the day before. When this gets into let me go look at the tick. So what the trend measures the amount of buying or selling of the exact same equities. That's what the trend measures. And when the trend gets really high, everyone is selling the exact same equities. When it trends low, everyone's buying the exact same equities. And that's what ends up happening at highs or lows. 877-927-6648. Dow's down 154, Nasdaq's off 54, S&P's are down 19. You got gold off 750, silver's off 18 cents. King dollar's up 332 ticks. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. The Dow's down 162. You get the Nasdaq off 58. S&Ps are down 20. Let's go to Vic in Maryland. Hey, Vic, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. Yourself?
Hey, very good. It's a beautiful day out here today. Just love listening to your show.
Thank you so much, man. We appreciate you growling and prowling with us.
Hey, I've got a question for you that's a little bit off the beaten path, but, I've read a lot about the TLT recently, and no one seems to want to own the thing. And I wanted to see what your opinion was on the correlation. It seems like there may be, well, I don't know, but is there a correlation between the TLT and the dollar? And is this its last leg before it rolls over as it moves down?
Okay, I didn't get the end of it, but let's walk through it. So the TLT, folks, is the 20-year plus bond treasury. And, as to the aspect of not anyone owning it, there's plenty of people that own it, that's for sure. I mean, it has a monster market cap, 8.9 billion market cap. That being said, I think you can sell the TLT. The TLT, what has happened is this. It's possible that what we had out here today is this, inside this bond market. The TLT, the high in the TLT was $135. That was generated on the 11th of February. The next high was $132.99, which is generated on the 7th of April. Well, we had the TLT get to a price point today of $130.02. It got over the high of Friday, which was $129.71. It's going to close underneath it. It's going to have lighter volume. That correlation looks like it's a small ABC down. Now, the bizarre part about it, now let's go back, let's go over. You're there, Vic, right?
Yeah, I got back on. Yeah.
Okay, cool. So I don't know if you heard me, but I think you could sell the TLT because it's a failure today. See, the TLT was going into 10.9 million. You're going to do about 6 million, and it's not going to hold price. Now, if I bring you over to the 10-year, now watch, this is how bizarre this is, folks, but I've seen this, when markets basically are ending, this is kind of how they end. So the 10-year, which this doesn't make much sense, but the bottom line is that this is what it's done. The 10-year, the high of the 10-year is the same date as the high of the TLT, which is February 11th. What the 10-year did today is that it's going into the downdraft from April 20th, and we had 1.29 million contracts there. Today we've done good contract volume. We've done 1.23. Now this is the kicker, but it really has to do 1.4, 1.5. So that's saying that, on a short-term basis, I wouldn't be buying the TLT. You can sell it,
Yeah, it looks like the TLT did an ABC up today and it finished it almost to the penny.
Well, on price it wouldn't be considered an ABC up because what happened is that it went down on volume yesterday. Yesterday it went down 11 million. So an ABC up goes like this. An ABC goes up on volume, back with lighter volume, down, then up on volume. Now, this is an ABC down though because it's come down from April 7th with volume. It's gone up with lighter volume. So in the correlation there, it's a potential ABC down.
So the TBT might have a little
Yep.
interest in here.
The TBT definitely has interest, man. So watch it. Here's the correlation. This is pretty cool, man. The TBT, folks, okay, is the ProShares 200% inverse correlation of the bull position of the TLT. And what that has done, and this verifies it also, is that you break topside on April 20th. You do that with 2 million shares. We just backed down today with 1.3 million, and it's already rejected lower price. So yeah, I like that trade, man.
Very good.
And you know what's so bizarre about it, Vic and folks, is that some of these trades, particularly in the bond market like that, when bonds took off today, but they still have big sellers up at those areas, and the aspect that the market's down and the bonds can't even get up further, so.
Yeah, there was a huge pipeline a couple days ago on that downdraft where it came down $3 or $4 in a day.
Right.
I'm talking about I'm trading the TMF, but yeah.
Right, so let's go to the TMF. The TMF is the direction 300% bull position, okay? And that little baby, I just, you can flip from the TMF, the bullish one, to the bearish one, man.
Excellent.
Cooking, brother.
All right, thanks again. Thanks so much.
Have a great
day.
one, man. Have a safe one. Dow right now is off 145. Nasdaq's down 56. S&Ps are off 18. We go take a look at the Qs are down $1. You got the SPYs down 180. If we take a look at the volume here, this is what you have happening with the volume. 62 million inside the NYSE. So that's gonna bang out. Well, it's gonna be close. It's gonna bang out maybe 950. Maybe we'll do 980. We'll see. It's gonna have to be quite a bit into the close. The Nasdaq's going to have it. The Nasdaq is leading the way down here. The Nasdaq's already done 1.7 billion. That sets up about 2 billion on the Nasdaq on the way down. And what you do have on the Nasdaq right now, we're down 54 points. The low of Friday was 47.80. The close of Friday was 47.75. So close, more like we're going to be below that. And what I expect you're going to see is that you're going to see this baby jump the creek. That's on the composite. If we go to the NDX, the NDX right now is at 43.33. That doesn't have to jump the creek. That's just going to push into this 43.07 level. The IWM is already broken. The IWM, that's 32 million shares. It already broke the 33 million. So yeah, so the IWM is a small ABC down. The 8 point on this is 115. The B's 111. 115 what? 115. It's not big. 3.5 points. That gets you to 110. Yeah, it gets you to 110. That's how that baby's set up. So 110 is the highs of the 12th. We're going to see a lot more action coming out after the close out here today because we get a lot of numbers coming out. We'll see how those numbers get generated and what's going to get pushed around out here. We go take a look at the XLF because what you have JP Morgan getting whacked around here today. The XLF trading down 31 cents. The low of last Friday was 23.10. We're at 23.31 right now. Now, what the XLF does have, this has light volume. It's only 31 million shares, and yesterday we went up with 35. So price is down there, but the volume certainly isn't down there. XLE, the XLE looks ripe for me to sell the heck out of this thing. What you got with the XLE out here, you're down $1.57. You're at 65.85. And let me just get this number because it was the November 3rd high. Yeah, you're there. 67.52. And look at that. That's the rejection. That's it. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And after the close, as I had said, we're going to have a lot of numbers coming out. Now, one of the numbers coming out, this is going to be wild watching this one. So, Illumina, ILMN. Now, this equity, folks, has gone from a price point of $242. We're trading at $133. And what it has is this. So, check this out. You have a high volume low at $130 from October of 2015. You have a high volume low at $130.51 from April 22nd. And there's nothing in here that's like saying it wants to go higher. So this thing, and if you've never seen this stock trade, this is a cycle stock, okay? Bottom line is that, in 3 weeks it went from $209 down to $130. This is coming out right after the close, so this is going to be great watching how this thing shakes out, man. Because the way that it looks is that when this broke topside, it broke topside January of 2014. And the top of that is 141. The bottom of that break is 113. So we're at 133. When you're normally into a bar that far, it wants to go to the bottom of that bar, which is 113. Now, this equity here can get destroyed a lot more than that. So it's going to be intriguing to see exactly what does happen when this thing comes out. So what these people do, they manufacture, market integrated system for large-scale generic variation in biological functions, gene sequencing. That's what this is all about. They take in, A lot of money. They're taking $2.5 billion, but you're paying for it. You're paying $39 for, thanks, Dave. You're paying $39 for every dollar of earnings. 39 to 1 is the PE on that baby. So bottom line is that we'll have that right after the close. Dow right now is down $1.40. You get the NASDAQ down 54. S&Ps are down 17. We take a look at, here, let's go to Zillow. The ZG, I think, or ZD, 1 second. Yeah, so Zillow is going to be coming out with numbers also. Zillow right now is at 25.70. Check this out. What a PE this is. This is sick. This is a 273 PE. Let me see what this chart looks like. So Zillow had volume yesterday, man, on the way up. So Zillow, oh, this is going to be pretty cool. Zillow looks like it can report some numbers here. Okay, so Zillow's already got killed. Zillow has gone from 51 bucks down to 25. Now this is cool because this has already gone into its breakout area, meaning it broke topside July of 2013. 1645. Okay, so it got to 1645 versus 1690. Now the question is it going to push into 27? Let me put this back on a weekly. So on a weekly, it doesn't look like it wants to do much, actually. Doesn't look like it wants to go lower, but, you know, yeah, 27 bucks. Where it could get to right now is this. The low of one of the downdrafts we had going back to the November 7th of 2015, the low of that is $27, the high is 32. So we'll see if we get a little pop on that one. That's also coming out right after the close out here. CBS, that's also coming out after the close, and that's trading at $55.56. And that doesn't have any juice. What's going to happen with CBS, I believe, is that, I don't know if that's Viacom or not, but they're going to have some problems. They're going to settle that case. Well, let me see. Is it CBS? I'm not sure whether it is. I think it is. But anyway, that case is supposed to go to court on Friday. They're going to settle that case because they're not going to let Sumner Redstone get on that stand or talk. It's Tom O'Brien, it's TFNN. You stay right there, folks. We're going to be getting lots of numbers right after the close today.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. A believer is an optimist who thinks of tomorrow. Duke Ellington. Market-wise, let's take a look at it out here. We had the Dow Industrials finished down 140, NASDAQ off 54, S&P's down 16.5, all with big volume. Gold contract down $7.20, trading at $1,288 an ounce. Silver down 22 cents at $17.43 an ounce. Platinum down 15 bucks at $1,064 an ounce. Copper down 5 pennies at $2.21 a pound. Light sweet crude off $1.13, $43.65 a barrel. Bonds, the 10-year note up 19 ticks, 130.09. 30-year bond up 1 full point, 19 ticks, 163.25. King dollar up 317 ticks, 92.93. King dollar got down to the 91.88 level, rejected that. We'll talk about that. Bottom line, you're up 300 at 92.93. Euro down 27 at $1.15. The yen is trading at 106. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We go over to the cash S&P. This is what you have. We did 1 billion shares out here today. You go up yesterday with 959 million. This is setting up a B to a C of an ABC structure on the way down. So what we're looking at is this. You have the B point, which is established, which is the 2052 area. I suspect we're going to go after it tomorrow, and we'll see whether we get the volume to break it, to have a small ABC structure on the way down. If you take a look at the SPY, what you're going to see in the SPY is this. The SPY on Friday did 142 million shares. We got down to a price point of $205.03. You bounced yesterday on 62 million. We did 100 million. You're laying out at this low. I expect you're going to actually jump the creek. And jumping the creek means that it just jumps over the 205.30. If we take a look at the futures, what you have inside the future market, the way this is laid out right now is this. The E-minis are at 2057. You closed out on Friday at 2059. So we'll see. The E-minis don't close for another 11 minutes. We'll see whether we stay down here. I do expect we will, but we'll see whether we do. E-minis, more than likely tomorrow morning, well, we trade them during the night, but when you folks wake up in the morning, more than likely the E-minis are going to be somewhere down about the 2040 to 2045 mark. That's the way that they're set up. Because you're already into the bar from the consolidation that we had from the 29th of March over to the 12th of April. Gold contract. What do we have with gold? Gold contract out here trading at a price point of $12.88. You did 208,000 contracts. Bottom line, you're backing down with lighter volume. You're backing into 274,000 contracts. The low of today that was established is 1284. What gold will have to do first is get back in under 1267. Doesn't look like it wants to do it. Silver. What do we have with silver? Silver's the same setup. Silver's much more volatile. Same type of setup. Meaning that you've gone up with volume, you're backing down with lighter volume. Silver right now, we're trading the July contract. July contract comes down with 59,000 contracts today. That 59,000 contracts is coming into 72,000 contracts. The low of that contract would be $17.18. We'll see whether it can get down there. Thus far, hasn't been able to do it. Bonds. Now, the notes. This is where it's going to get really cool. So the notes out here today, big bid inside the notes, meaning, you had buyers on the way up. And then, bottom line, they still couldn't hold the higher price and get the expansion simultaneously. So when we came down, folks, we came down on the 20th of April. We came down from 130.19 to 129. We did that with 1.29 million share contracts. We did 1.25, which is decent. Bottom line, no, it couldn't get up into that 130.19. That's a big number. Why? Because that's where the breakdown was. Well, then that's the second breakdown, by the way. The 30-year bond actually has released more information because the 30-year didn't get even close to the high of the breakdown. On the number on the 30-year is 165.29. You had 282,000 contracts. We got to 164.10. So that's also, to me, saying that, guess what? The Fed doesn't want to go up at rates, but the market itself slightly is going to go up on rates. King dollar. Let's go over to King dollar. So what do you have with King dollar? King dollar today got down to the price point of 91.88. A rejected lower price. That being said, we had higher volume. So what does that set up? If we take a look at this on a continuous contract, what you're going to see is that we put this on a weekly. So we've been in this consolidation since January of 2015. The November 24th low was the price it was going after, which is 92.52. Bottom line, we get to 91.88 today. You have the juice down there. we'll see where this bounce comes in. You know, I expect you probably get some kind of a bounce. I actually don't expect this bounce to go too far. It could go into 94.24. It could go into 94.64. Both the 94.24 and 94.64 is this. 94.64 is the low that was established the week of the 18th. The 94.29 is the low that was established the week of the 1st. Lots of numbers. We're going to have lots of numbers coming out here. We go take a look at the small caps. What we have with the small caps is this. Small caps broke a B point of an ABC structure and broke it with volume. The B point here was $111.72. You're at $111.62. That's confirmation that, guess what? We're at $111.62. The A to B structure, the price projection is 110. You know, so we'll see how we get down into those levels. We certainly had the expansion of volume inside the indices today. We did 1 billion shares versus the 900 million of yesterday. NASDAQ, bottom line, the NASDAQ is the leader on the way down. NDX 100 is the leader on the way down. The composite itself has juice. We did 1.9 billion shares out here versus a 1.8 on the way up yesterday. If we go over and look at the IBB, bottom line is that now the IBB affects the composite more than the NDX 100, but the IBB also finished down $5. Finished as lows. The IBB looks to me like it wants to run down to this 252 area, and right now we're at 265. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll be coming back with lots of numbers for you. The Dow finished down 140, NASDAQ down 54, S&P's down 17. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 140, Nasdaq off 54, S&P's down 17. A couple numbers that just come out. Illumina, ILMN, that come out. That is closed at $133. It's trading at $129. That is going to jump the creek. It had two high volume swing lows, folks. Okay, and this thing, this is a psycho stock anyway. This thing's going to get destroyed. ZG, Zillow came out with numbers. Zillow closed at $25.72. That is trading up at $28.83. Now let's go to our man, Mr. Andy Heck, as we do each and every Tuesday at the 30 past the second hour. Our man, Mr. Andy Heck, don't forget, every Tuesday, Thursday, right after my show, 5 to 6 Eastern Standard Time, has a great show. You can get it right on your cell phone. So right now, if you're on the East Coast listening in your car, you're on the West Coast listening in your car, remember that right on your cell phone, you just go to TFNN.com, hit Tiger TV. You're going to get great audio. You're going to get HD video, comes across beyond belief. Andy is also going to be doing a nice college course for us, folks, okay? He has a great newsletter, but we're going to go over this course first. This course is tomorrow night. It's the 12 essential lessons for trading commodities. Now, the way this is set up, folks, is really cool. And what it is this. It's 2 hours, 4 separate nights. The first one is tomorrow night, 5:30 to 7:30. You're going to get 3 lessons. Commodity markets and demographics, market breakdown, physical versus the derivatives, and then overview of the market structure. That's going to be tomorrow night. You get a 2-week break. May 18th, 5:30 to 7:30, 3 more lessons. June 1st, 5:30 to 7:30, 3 more lessons. June 15th, 5:30 to 7:30. Now, 12 lessons, folks. Great education inside the commodity markets. Check it out on the front page of TFNN. We know time is valuable. If you can't make some of them live, don't worry about it. It's going to be on your page for 1 full year. You want to know commodities inside out, and I'm talking about the fundamental aspect as well as the technical aspect. This is the guy who can teach you. Andy Heck, what's going on?
How you doing, Tom?
Doing great, man. Yourself?
I'm doing good. And no final exam.
And no final exam. How's that? I know, final exams. Oh my.
The final exam is always in the markets,
The
right?
final exam is, that's right. It's going to be the bread in your pocket. I like it.
That's for sure.
I like
That's for
it.
sure.
Totally.
So, crazy day here. Dollar, new lows.
Yep.
And then a bounce.
And then a rejection. Yep.
And a rejection.
Yep.
A bounce. But lots of key reversals. So let's go through that really quickly here.
Okay.
We had a bearish key reversal yesterday in silver.
Yep.
Put the chart up there, made a new high, and then got up to 1806, closed below the previous day's lows, and it's followed through a little bit today, but not too much. All right.
Okay.
Platinum, bearish key reversal today. Corn, bearish key reversal today. Wheat, bearish key reversal today, and cotton, bearish key reversal today. A lot of these this is just showing you how dollar sensitive this commodity world is.
Yeah, totally, man.
It is totally dollar, but we have to remember the dollar did put in a new low today.
Oh yeah.
Look at that chart.
Hey, listen.
I mean, and you know what? The dollar, I would have been a little concerned. The dollar did not. It closed close to the highs. It did not make a bullish key reversal, and a lot of the things that have forced the dollar lower still remain intact. The Fed is not raising interest rates for the next, at the earliest, for another 6 weeks, right? So, and I'm not even sure they're doing that, given the deflationary pressures that we're seeing here. Oil ran out of gas a little bit here. No question about it. I mean, look, the thing was up almost 80% since February 11th.
Right.
It's not surprising that oil should come down a little bit.
And it's not surprising to me that the dollar should bounce either. I mean, that's
exactly.
the reality, folks, okay, and is this, okay? So the dollar has just gone in a one-way route. March 1st, the dollar's at 98, and it goes down to 91. Just so you can get it's if you're not trading commodities, folks, you can't get the context of that, because what that is, by the way, is that if you were in the right commodities, you could buy a few houses. That's how dramatic that is. So
it's been a dramatic move.
Right.
And for us to come back a little bit is okay. I mean, this is a trading market. These things just zoomed.
Right.
No question.
Right.
So I still kind of like, I mean, I think gold action has been pretty good.
Hey, you know what? I love it. I know. You know what? It's interesting. So, Andy, I was bringing this up in the first hour. So, the whole not just the GLD, the ETF structures themselves, right? When you have them going with you, you know, it's a nice trend. When you have them against you, it's a killer.
Right.
Well, on Monday, because the way that gold went up on Friday, the GLD had to buy, in order to basically keep the net asset value, 20 metric tons of physical gold. Well, 20 metric tons, folks, is approximately 623,000 ounces of gold. That's an indication, okay? That's real demand. Never mind the futures market. We're talking physical gold, okay? They, you know, so when I and that's the largest single buy since 2011. When I see that, you know, I remember when the GLD started. You know, that's real demand, man. That's
real demand. It's real demand, and it's real reflection of uncertainty in markets. I mean, gold. Remember, a lot of commodities made lows in January and in February.
Oh, sure.
We had oil down at 26. We had copper under $1.94. Even silver made a new low in January. But gold came out of the gate charging higher, and gold continues to listen. I mean, what are we? We're less than $20 off the highs here.
Oh, yeah,
So-
no, there's no doubt. I mean,
Right.
gold to me, we haven't been on since Friday. So, see, gold to me broke the B point on ABC up with volume. That's 1442. That's the price projection. So.
Can't disagree with that. And silver, you know what? Silver's going to be volatile. Can it go down and take a look on the 17? Sure.
Yeah,
Can it
silver's
go
a psycho,
up?
man.
Can it go up? My target on silver right now is 1850.50.
Yeah.
That's the next level. Above there, you know, $20 comes into play, and I wouldn't be surprised to see a $20 handle on silver.
No,
Platinum's acted well. You know, all of these commodities are acting well, but they're going to be very dollar sensitive now. Now, if the dollar doesn't continue to move higher, the commodities are going to take another look at it and say, "Hey, it's down at 93 level," and they'll rally.
There's no doubt. And you know what has happened now? There's been a little change of tune. You know, the dollar's been weak. But between Japan and Australia, what has happened to the Japan market in itself, man, that has thrown some real wrenches into the dollar. Now, I'm not sure whether Japan is open tonight. You know, they have some kind of holiday. They've only been open twice in a week. You know, but if they're open, folks, okay, you can expect more action inside the dollar. And I'll find that out before we get off, whether they're open tonight or not.
I want to take a look at something I think is very interesting here. I want to take a look at cattle, because we're coming up to grilling season.
Okay.
Right, and cattle are now down at the lowest level since, let's go back, I think 2012. And
115. Okay.
Right. So that's the lowest level since 2012. And when we get back from the break, if you have time, I'd love to kind of go through what I'm seeing here.
Yeah, we definitely want to do that. We want to go through your course, too.
Sure.
You stay right there. Andy and I are going to be coming right back, folks. The Dow Industrials closed down $140. You had the Nasdaq down 54. S&P's down 17. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. And, of course, don't forget, as soon as this program ends, you can listen to Andy 5 to 6 every Tuesday, Thursday, right on your cell phone, TFNN.com. Hit Tiger TV. And we have, let's see, what chart do you have up there right now, Andy?
I'm sorry?
Is that soybeans?
No, we would talk. I have a soybean meal because I just wanted to finish up on my cattle.
Oh,
so
yeah, cattle.
we established that cattle fell to the lowest level since 2012. And in 2012, we had a drought. And feed prices went through the roof, and all of the animal protein producers brought their cattle to slaughter.
I remember that, man.
And there was a lot of cattle on the market.
Yep.
And the price went down, and then it zoomed because they liquidated herds.
Right.
So what are we seeing now? We're seeing soybean meal, which is the key ingredient in feed for this animal protein.
Okay.
Rallying over the last month from under $270 a ton to $350 a ton. So we could see some early liquidation as feed prices go up, which will force meat prices lower for this grilling season. It's a great time to buy steaks right now, but longer term, we could see a repeat of history, and we could see, if they are liquidating herds, higher beef prices down the road.
Wow. Yeah.
So just an interesting kind of tidbit.
Yeah, and this is a cool time that comes down during grilling season, so we'll have cheap beef all summer.
Cheap steaks. Get those ribeyes.
Totally, man. Totally. Hey, let's just take a quick call, all right? It's in the commodity market, too. Let's go to Rick in Mass. Hey, Rick, what's going on?
Hey, Tom, how you doing?
Doing great, man. Yourself?
I'm doing great. And hey, Andy, I was like listening to both of you guys.
Well, we
appreciate
you growling and prowling with us out here, man.
Can you take a look at Freeport-McMoRan for me?
Yeah.
I wrote this up for some time. I got out, made some good profit on it, thinking it was going to come down. I didn't get this last leg up, but I like that it came back down. So I'm wondering Is this a good entry point, or should I wait a little longer
No,
before I get in?
wait a little longer. This is a nice setup, though, folks. Check this out. So this is Freeport-McMoRan. Okay, this is one of the largest, it may be the largest copper company there is, but they have copper, gold, and oil. So hey, I'll give you that breakdown. Let me see this breakdown. 1 second. So the breakdown, the breakdown goes like this. They do $7 billion. They do $10 billion in copper, 1.7 billion in oil, 1.5 billion in gold, and 2 billion in other metals. Okay, so you're talking big numbers. You're talking the 16 billion they take in. Now, when he says it, it went well. It went real well. It went from $3.52 to $14, folks. Good. So, what I'd do here, I'd wait somewhere around like 10.50, Rick. Okay. That's just a normal retracement on something that went higher, man. Bottom line, you can't go higher forever. I just sit there and wait, man. The cool thing is you pull back with lighter volume today, man. I mean, it's 58 million, but guess what? The 58's going into 74 million. The 58's going into 79 million on the daily. And we put this on the weekly, and 1049 is the number, man. Yeah.
So as it reaches 1049, 1050, what do I want to see? Lighter volume than today?
That's correct. Lighter volume than today. And then what I would also do is I put it on a weekly, too. So on a weekly, at 1049, the low of that week was 726. The high is 1049. You did 359 million. That's big numbers, man. It's going to be hard to break that down, especially coming off of $14, going down $4 to get into that level. Do you know what I mean?
Yeah.
So you're going to want to see lower volume than the prior day. And that's the hardest thing to do, by the way, folks. You want... It can be high volume, but if it's lower than the prior day, and then it's lower than what you're going into, and you get a rejection of lower price.
Okay.
Cooking, brother.
Great. Hey, Tom, can you take a look at one more? I know you haven't any on the phone. You're talking commodities, but there's one I want to look at that's outside of commodities altogether.
That's all right. Go ahead.
It's Cognix. CGNX.
CGNX. Let's see. Okay, so they design, develop, manufacture machine vision systems. This is right in Natick. The low's 28, the high's 51.
So I'm wondering, because of the nice run-up today because of earnings, they're heavily weighted in Apple. The biggest customer is Apple. But I'm wondering if this is going to get back to the 51. Should I get in now, or
don't touch the stock, man. The stock's not going anywhere. This stock croaked from 45 to 32 with 10 million shares. I can see, it went up today, man, but there's nothing here.
There's nothing there. I didn't think I should. So am I looking for that 52 price again?
This couldn't even hold the swing point. So check this out, folks. It went up over 12, 15% today, but guess what? It couldn't even hold 41.58, man. That's a problem, because this is coming in. This is where you take a daily, but then you see what it's coming into. It's like, oh, really? This thing got killed, man.
Longer term, Tom, when you're looking at it long term, what would be the good entry point? Is it the $28 mark where it stopped and went back up?
Yeah, it could be the high of the 28, which is the 32. Yeah.
Okay.
Let it go into the 32 first. What he's talking about, folks, is this. 32 is the high of January, and 32 is also the low of August. Yeah. I'd let it get in there first. But what you need first, which you don't have, you'd want this to basically hold at least 41.58. If it doesn't hold 41.58 this week, don't even think about it, man, because that's not showing you strength.
Yeah, the $35 mark is around the strength mark, and if it breaks that, then I think it'll go back down to 28.
Well, that's that. I understand what you're saying there, but that's not strength. That's support. Strength, to me, is that when you have wide price spread, accelerated volume on the way up, so you know you have a larger buyer. This doesn't have that.
Okay.
Okay, cooking, brother. Have a great one, man. Have a safe one.
Bye.
So, we got some action all over this place, Sandy. And,
we do. And one of the things I'm seeing is that price spreads. The ranges, high to low, intraday are really widening out across most commodities.
Right.
And that's, listen, volatile market conditions here. The dollar, listen, the dollar's a currency. So a lot of people are going to focus on, the dollar bounced, blah, blah, blah. The dollar has come down so dramatically. And currencies tend to be very stable. Commodities, on the other hand, tend not to be very stable.
Right.
So you're going to see just a lot of stuff going on. Like I listed a whole bunch of 1, 2, 3, 4, 5 different bearish key reversals today. 1 yesterday, 4 today. Yeah, that's important. But these things, they need to kind of trade back and forth here. Nothing goes in one direction. That's for sure.
No doubt. Hey, so talk to me, tomorrow you're going to start off your beautiful course.
Yeah,
talk to me about the beginning of the course. So what are we teaching tomorrow night?
So tomorrow night, we're going to talk about commodity markets and demographics. We're going to talk a little bit about the demand side. And the demand side is always increasing, and, resources are finite at a price.
Yeah.
And, we're going to try to understand demographics. Then we're going to go in.
Okay, stay right there.
Sure.
Folks, you stay right there. We're going to kind of walk through what Andy's going to teach. As soon as we come back, we get some more numbers for you. Dow finished down 140. You get the Nasdaq off 54. S&P's down 17. Andy and I are coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And starting tomorrow night, folks, our man, Mr. Andy Hecht, he's going to be hosting a 12-part course all about commodities. It's going to be over 420-minute sessions beginning tomorrow night. So check it out on the front page of TFNN. Andy and I right now are going to go through the first session, and we're going to see what we're going to learn tomorrow night.
Right. So what I'm going to do, Tom, is each lesson's going to be about 35 to 40 minutes.
Yeah, which is great because people can learn and pay attention on that. Yeah.
And then a little break in between. The first one, we're going to talk about commodity markets and demographics. We're going to go through kind of the demand side and the supply side. It's going to be a little basic economics, certainly, and a little bit of basic commodity economics. We're going to talk about where commodities trade, and major exchanges around the world. We're all familiar with the exchanges here in the United States, but we're going to go into that. We're going to talk a lot about demographics,
right?
Because that's really important. Population's really important. Then we're going to do a little case study.
Yeah, because when you were bringing up the last week, folks, Andy, when I was interviewing him, was awesome, man. He brings up this clock. And the clock is an absolute mind blower to really understand how many people are on this earth living or being born versus dying. And it's growing exponentially.
And how many people are competing for commodities?
Yeah, right.
That's what.
And we're so used to not competing for anything, just walking to the store when people are competing just to stay alive, right?
Right, exactly. Yeah. And if the price of a loaf of bread doubles here in the United States, we don't take too much notice. But believe me, they do in other parts of the world.
Yeah, right.
So the second part, the second 35, 40-minute piece is going to be on market breakdown. We're going to talk about the great pyramid of commodities, starting with the physical on top and going down to the different levels of the derivatives, which are meant to replicate what happens in the physical market.
Sure.
We'll go through each of those, and we'll look at a few examples, and we'll talk about the pyramid and differences, and we'll kind of end the course tomorrow night.
Well, let me stop you there. You know what's so cool about that is this: when I was talking in the first hour, Andy, about the GLD buying 20 metric ton of gold on Monday, right? Mm-hmm. There was a question like, well, why didn't they wait? Okay. And I was explaining that inside the GLD, they have to, in their prospectus, they have to have physical gold. But during the daytime, what happens, folks, is that they use the derivative so that their net asset value, they're not trying to make money, they're delta neutral, they're just trying to stay at the price. And that's really important understanding because they need the derivative during Friday, and then they got it delivered on Monday.
Right, exactly.
Yeah.
And gold is an easy one.
Well,
because
it's great to understand. You know what I mean?
Right.
Yeah.
Gold is easy, but some of the others are much more difficult, the other derivatives. And there are limitations the further you go down on the pyramid in terms of the ability of the administrators or the issuers of these ETF and ETN products to actually replicate. And you'll find a lot of times there's big divergences in performance.
That's
because
Huge.
They're not able to. So you have to be very cautious about that.
You do.
And if you're trading them, you have to keep an eye on what's going on closer, at levels closer up on the pyramid.
I agree. Big time.
Then we're going to end up tomorrow with an overview of market structure. And what we're going to do is we're going to kind of outline all of the intra-commodity spreads, the inter-commodity spreads, the quality spreads, location spreads, processing spreads, inter-commodity spreads, the substitution spreads. And we'll look at some case studies, and that'll set the stage for the next two sessions where I'll go into those in detail. Each one of those will be a lesson. Backwardation and contango, term structure, processing spreads, location spreads, substitution spreads, and quality spreads. So that's for May 18th and June 1st. We'll kind of set the table for those tomorrow night in the final 30 minutes or so. Look, I give this course, and I do it in very abbreviated fashion when I go to teach in Denver. I do it in 4 hours, basically. And it's a little bit more quantitative there because we are dealing with a lot of like postmaster students and stuff. And people who are learning how to actually buy copper mines or buy oil refineries. So there's a lot of quantitative and balance sheet types of things in that.
Sure.
But in terms of understanding the essential lessons for coming to these markets and trading them and looking at them to make wise economic decisions, what I did is I kind of highlighted all of the things that go into my process when I look at these markets, and when other professional commodity traders who I've worked with over many years look at.
That's a beautiful
So I think
thing.
it'll be a great course. I really think it's very valuable.
Yep. And folks, the way you come to it, come over to our website at TFNN. The course is only $595. That's 12 lessons. It'll be on your page for 1 full year. If you happen to be, you want to be a subscriber of his Technomental Commodity Report, you're going to get another 10% off.
Less than $50 a course.
I know. Seriously, man. And what happens, just so you can understand something, folks, well, I'm prejudiced right now. I think we're in a commodity bull market, okay? So you're listening, you're hearing something, but bottom line is that's what I think. And if you want to really make some bread, and what I've found, Andy, you know what's so great? You know what I love? What I've found in the commodity market, right, is that there's so many times that people just say, it can't go higher, it can't go higher. And I'm saying to myself, what do you mean, why can't it go higher? Because the commodity market really is big, but it's small. And it's like here now. Do you know what I mean? It's like,
there's no can't. Here's an example.
Yeah.
Cotton traded in a range between 50 cents and $1 for as long as I could ever remember.
Okay.
In 2011, it went to $2.27 a pound.
Right.
And why did it go there? Because people kept saying, can't go higher, it can't go higher.
Right.
And they carried out not just traders and speculators, people in the industry who said it can't go higher.
Listen,
but it did go higher.
The first time, and if I learned anything, the first time in 2002 when gold stopped running, they carried out Newmont and Barrick. Newmont and Barrick, folks, had to close a short position. They closed it not at the highs, but pretty close, and it was billions of dollars. That's why both of those were dogs. Now, this time they're not. They haven't sold forward.
They learned their lesson.
But when they sold forward, man, they got nothing.
Oh, I remember when I was at Solomon, Barrick was selling 10, 15 years forward at $290, $300 an ounce.
Amazing, I know.
So they were getting a price, but with the contango and with the forward premium, rather, they were getting a price close to $300. They thought it was a great deal.
Yeah.
Wasn't a great deal at above $1,000 an ounce. That's for sure.
Them and Chancellor Brown when he sells off all of the UK's gold, right, at the low.
We used to tell them all the time when they came to do that. We used to tell them, you got to spend some money and buy some call options as insurance, as hedge insurance, because the people who buy your stock because it's a gold mining stock.
Right.
And if the price goes up and your stock don't go up with the price, you're going to have a big problem.
Yeah.
And they didn't want to spend the $5.
What a trip.
They didn't want to spend the $5. But they learned their lesson.
Yeah. Yeah, this time they did, no doubt.
Yes.
Well, listen, man, we'll give you a voice, a little rest. We know that you're going to be kicking it off in another 20 minutes, man. So I can't wait to hear your program and go to the workshop tomorrow night.
Thanks so much, Tom.
Okay, man. Have a great one. Have a safe one. And you stay right there, folks, because our man, Mr. Andy Heck, of course, is going to be coming up next. Now, if we take a look at, we'll have some more numbers for you as soon as we come back, because lots of numbers are out there. Dow finished down $140. NASDAQ got 54. S&P's down 17. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And, you talk about another politician hitting the dust, man. This is pretty intense. So if you did, Sheldon Silver, folks, okay, he was the most powerful politician in the state of New York, okay? I mean, big time, too. Bottom line, he was just sentenced to 12 years in prison, and the guy's 72 years old. Big conviction, and he should be in jail. I mean, he's been shaking down everyone forever. And bottom line is he got caught. It blows my mind that he can be so powerful for so long, and they think that they're just going to get away with it. And it's just amazing. Man. Imagine going from that type of power, and then you're in prison for the rest of your life. 72 for 12 years. And I'm sure, anyway, pretty wild. Okay, so let's, the Nikkei, by the way, too, I know I was going to bring it up with Andy because I know Andy's from New York, and it is disgusting because what happens, folks, it hurts everyone in New York. That's the bottom line. When you have corruption inside cities, states, whatever, it hurts everyone. It just does. The Nikkei, folks, the Nikkei is closed the next two nights also. So let's say what today's today. So it's open. Let's see, tonight, tomorrow night, Tuesday and Wednesday. Okay, so it opens Thursday. Opens Thursday. So the Nikkei, and what's important about that is this: the Nikkei, folks, has come down to 7. It was only open 2 days in the last week, and it was at 17,500. Now in 2 days, it came down 1,400 points. And it looks to me like the next time it opens, it's going to go down to 14,800. And that's the swing low that is established out here on the 12th of February. So the Nikkei is going to be the first one to come down into that level. If we go take a look at the FTSE over in London, out here today. There we go. 1 second. Come on, baby. Bring it up. Okay, so FTSE. The FTSE was down 0.9%. No big deal there. $56. Take a look at the volume here. Oh, good. We get the volume. So, okay, so the FTSE, 870. Yeah, check this out, man. The FTSE's an ABC down. This is important to know. So the A point on the FTSE is 6,400. The B is 6,224. C63 or at 61. The FTSE's going to make a run down into the 6,000 level right now, and we're at 61. The DAX in Germany was down 1.9% today. We're at 99.26. The DAX. Okay, so this is a worldwide deal. The DAX in Germany also had an expansion of volume. Now, what this sets up, this is going to set up a heavy night in Asia, number one, a heavy night in Australia, a heavy day back over in Europe, and I expect what you're going to see when we open up is that you're going to see our futures down also. So what did the DAX do? The DAX and ABC down also. Took out a B point of 10,038. Had 129 million versus 112. That sets up the DAX going down to 94.84, which is $500 down. It was down 196 today. So you get some slight problems in paradise. We go over to our own S&P futures. Our futures, get your stops in, folks. If you're just a one-way trader, meaning long and mostly strong, just get a stop in, okay? You've had 3 shots here to get out of this market. The futures were 20.57. You can expect we're going to be at like a 20.30 in the open tomorrow. That's down pretty good. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Grab it and have a blast. Stay tuned. Andy's coming right up. TFNN.com. Hit Tiger TV.